I'm Derrick Weyrauch, President and CEO of Palladium One Mining. Palladium One is a critical green transportation minerals company. We're in exploration and development stage with assets in Finland and in Canada.
You have indeed. Welcome back, Derrick. I just wanted to kind of pick up with you. You saw the headline, discovered a new nickel copper sulphide zone on your Tyko project. Tell me a little bit more, please.
Yes, this is the second discovery on the property in less than 18 months. It's on the far western edge of the property in a zone we're calling West Pickle, about 20 kilometers away from the original discovery of Smoke Lake on the eastern side of the property. The Smoke Lake rocks look identical to what we announced recently at West Pickle, although at West Pickle we do not have assay results back yet, so they'll be coming out in due course. But the rocks look basically the same, and we had tremendously high grade at Smoke Lake, and we're expecting the same at West Pickle.
Right. Okay. So sounds like you're getting on with things. I mean, I want to talk to companies at the moment because I'm more interested in how they navigate these kind of choppy waters that we're in at the moment. So headlines like that are delightful and lovely, and it tells us that you're actually getting on with stuff. But give me a more insight into how you're approaching things, because you got money in the bank, but what do you do?
Well, the reality is, from a macro perspective, we're in a pretty awful cycle right now, but cycles come and they go, and you have to work through it. In Ontario, we have ample funding for this year. We started the year with about $5 million worth of flow-through funding dedicated just for the Tyko project. And we're investing that in the project. We started drilling about 2.5-3 months ago, and we'll be drilling for the balance of the year. And really that money came about as a result of flow-through funding that we did in late 2021. And legally the requirement is that we invest the money over the course of this year, so we'll be doing that. But, more holistically from a company perspective, you have to be cautious at these times of the cycle. And you still need to move projects forward. And we're very happy that we can do that with the money we have and the activities we're doing at Tyko. But we're husbanding to some degree the other funding that we have, what we refer to as the hard dollars, in order to work our way through this cycle. And we're spending the money on what we believe are very creative activities. Maybe they're not as expensive as drilling, but highly accretive, such as permitting activities and just technical assessments of delivering a project.
Right. Okay. Cycles, like you say, they do tend to move in cycles, so it will come out the other side. I think that's important for investors to remember. But if I may, just dig a little bit deeper. You've got flow-through money, so you have to spend that money in the ground within a certain time frame. But if it wasn't flow through, if it was hard dollars that you were looking at, would you be spending it in a market like this?
It's a balanced approach. At the end of the day, you have to make a judgment call as to how much of a runway you need and how long this cycle is going to last, because you don't want to find yourselves in a position where you're getting on vapors with regards to cash, and you're going to be in very weak position and perhaps not even able to raise capital to build up the treasury again, depending on what the market conditions are at the time. So we're taking a go slow approach. You're right. We do need to spend the money this year, or invest the money this year, as far as flow through is concerned, for Tyko, and it's a large program that we have going on. I think we would probably continue to invest, whether or not it was flow through and whether or not we had that obligation, given the discovery success we've had. It's quite unusual to get these spectacularly high grades of nickel, especially at surface, and in a great jurisdiction. And we've had lots of evidence that there's ample opportunity on the particular property. So I think we would have continued to invest in Tyko heavily. Perhaps not the full $5 million that we're spending this year, but we would have definitely continued to move the project forward.
Right. And I think we're both old enough to have been through, I was going to say one or two, probably like 2 or 3 of these cycles before, unfortunately. And I'm trying to sort of get sort of parallels to from the past, because history does repeat quite often. As the companies that don't do anything, kind of sit in their hands, as it were, those companies they're starting from. They've got to get that balance between making sure that they've got enough capital to kind of get through to the other side. But they're also making the bet that if we do nothing with the project, it'll be fine. We'll just start up when the market's just a little bit in a little bit of a better mood and a little bit more money available. But what would you say is the better tack, given looking back in your experience?
Well, it's probably situational dependent, depending on where each company is. If you sit back and you lay people off and do nothing and just hoard cash, you're not really going to have any infrastructure when you come out the other side of it. You're not going to have news flow to support the company and perhaps do that next raise that you need. So doing nothing, I don't think, is an option. You need to press forward, keep your infrastructure, keep your people in place, and the institutional knowledge, if you will, and constantly add value and have something to talk about and be relevant for the market. If you step away completely, I think starting is extremely difficult. But you can't run out of cash either.
No, I know. Like it's a balancing act for sure. You mentioned you just come back from. Were you at both conferences? Were you at Beaver Creek?
No, I just did Beaver Creek.
You just did Beaver Creek. Okay. And how was that? Who was there?
It was extremely well attended. It was surprisingly busy, and I think it was a very active conference. We had a tremendous amount of meetings. I was actually very pleasantly surprised, much more than we've had even in prior years pre-COVID. So that was very good, and it generally a good attitude. I think most people appreciate where we are in the cycle and are hunkering down, trying to understand how to optimize their portfolio, which stories they want to get behind, and generally it was a very positive conference.
It's interesting. Were there a lot of industry players? And by industry, I'm talking about, obviously you've got copper, you've got nickel, you've got PGEs. You've got a lot going on that points towards this kind of green future which we're all demanding. With a lot of industry partners there in terms of battery manufacturers and automotive manufacturers, or was it just the usual suspects?
It was mainly the usual suspects. I think those types of conversations are happening outside of the formal conferences. You don't need the big automotive companies going to a mining conference. If you've got an asset, you can give them a call.
I know, but I do. But I tell you, some of the conversations we're having recently is where you're seeing the OEMs and the battery manufacturers sort of moving upstream, as it were. They're looking to secure supply, and they're having conversations they never imagined they would 3 years ago. That's for sure. But the other type of conversation that I've been party to is where you've got groups looking, say, to supply. To secure supply, and they're not able to get the binding contracts that they'd hoped, because there's a lot of conversations by companies talking a good game, but not necessarily being able to prove or give lend comfort that they're actually going to be able to get into production, and which is then having sort of knock-on effect further downstream as well, in terms of the certainty that it kind of gives everyone else in the supply chain further downstream going on. So I just wondered if how intense conversations we're getting around actual production levels versus just mining talk about the theory.
Yeah, I think this is where reality meets the rhetoric. Practically, when you've got the OEMs, they're looking for certainty that you can supply if you're going to have those conversations. So they're going to be looking for much more advanced projects, and probably ones that are actually in production or in development, as opposed to ones that are still in the exploration development stage and might have quite a long runway until they get into production, and a lot of risks and challenges that they have to deal with along the way. So yeah, I think those conversations, the ones that I've seen and been aware of, are with larger organizations that have advanced projects. And yes, you can engage with the OEMs on a particular project, and they may help you out by talking about an MOU or something along those lines. But at the end of the day, I think it's still a little bit early for an exploration development stage company, unless it's a spectacular asset, and I don't think we've really seen that at this point in time where they've actually stepped in and said, "Hey, we're going to support such and such project."
Yeah, no, it's just I just thought sort of interesting types of conversations. You use a great word there, reality of the situation, which is I think sort of dawning very, very quickly in industry. That we've seen it in all commodities. We've seen it in uranium. We've seen it in copper, nickel, etc. Where there are massive supply chains reliant on the step before doing their job or being able to access whatever it is that they need to be able to get, move further downstream. There's a lot of nervousness around supply demand deficit, it seems, in the marketplace, and I'm sort of looking for those sort of signals as to what companies are doing in terms of changing the way that they work and operate to make sure that they're signaling to industry that they do have the quality. You're looking at a sort of high grade project. I imagine that's very, very exciting, but ultimately you've got to also deliver scale and the economics for yourselves as well. But do you change do these sorts of conversations change the way that you try and run your business, or do you just need to be sort of cognizant that at some point down the line people are going to look for a bit more certainty from you?
Yeah, the reason for excitement is right now because the OEMs need the supply, but is the analogy not M&A? All right, that's another reason that any one particular company or project could be exciting, because we're so wonderful, we're going to get taken out. But under both scenarios, the company still needs to do all the de-risking, advance the projects, deal with permitting, deal with economics, as you say, deal with financing, construction, et cetera, et cetera. So whether it's M&A or with the OEMs, there's going to be trigger points and levels of advancement that need to be achieved for any one of the counterparties before they're going to act. And I think the job of the corporates is to just go through that checkbox of de-risking and advancing the project and communicating where they are, staying relevant in the face of potential counterparties in order to take advantage of the situation. Where what I'm seeing, certainly in North America, is that the governments are stepping in to try and assist the development of supply chain and provide certainty of supply for the battery plants, as an example, that are being constructed in the States. And we saw an announcement several weeks ago where Volkswagen and Canada got together to provide some degree of supply certainty for a new facility in the United States. So it's happening at a senior level, but with larger corporates and larger projects, and they're looking at different tax schemes and tariffs in order to be able to make it easier to provide the supply security to the plants, but they haven't really pushed it down at the mining company level or the project level, from what I've seen. But I think that is coming, and I think it'll come quick. But they're really looking more at the upstream systems first.
Right. Well, again, I think it may be difficult markets, but it's exciting times because you've got a whole bunch of, hundreds of billions of dollars being pumped into an infrastructure which needs feeding. So I guess watch this space. With regards to, if I may come back to the flow through money, specifically, you talked about obviously West Pickle and obviously what you previously done at Smoke Lake. What will the money be going on? Because you talked about a second drill coming into play. So are you focusing just on West Pickle for now, or are there other targets?
No, we applied for 6 permits. We've received 4 permits, and they're for different zones on the property, largely where we had multi-line VTEM anomalies or electromagnetic anomalies that we subsequently ground truthed with soil sampling and the anomalous values of copper, nickel, cobalt. So there's a number of different zones we will be testing initially on the first rounds. Certainly with what we've seen at West Pickle and the fact that it's only about 3 kilometers away from a zone called RJ, which has a very good historical intercept from 2016 of approximately 16 meters of over 1% nickel, and quite shallow as well. So there's something going on, and What we believe is happening is that we've got a whole host, or swarming, if you will, of dikes or conoliths that fed the bulldozer mafic ultramafic intrusion at the north end of the property. And what we're doing is we can see a bit of a correlation between those interpreted dikes and where the showings are that we have at this point in time. So we'll be attempting to connect the dots. And when we brought in the helicopter rig about a month or so ago, that was really to test some of those zones that were a little bit harder to access at this time of year.
Right. Okay. Interesting. And I know we touched upon it last time, and I think I know the answer. But with regards to Finland, is what's happening there? I think we did have a question sent in with regards to an update on the ongoing scoping study.
Yeah, so we've largely done the bulk of the baseline permitting work. We still have to do the hydrological model and put in the groundwater monitoring wells. We've deferred that given the market conditions, but that's something that we can do fairly quickly. The scoping study is underway, and again, our focus here. We were initially looking at doing a full blown PEA and costing it all out and getting it out into the market, but given all the inflation, the uncertainty, it really doesn't make sense to go and spend that money at this point in time. So the focus is really on the technical aspects of it. So as an example, where would you put the waste dumps? Where would you put your processing plant? What are the water management issues we might have to deal with? Do we need to consider dry stack tailings, for example? So going through those evaluations, and there'll be an internal costing estimate that we'll be looking at as well to help inform future decisions. But that's really the focus of it, and we would anticipate that work to be concluded in the fourth quarter.
Okay, so steady as she goes.
Yeah.
Okay. And that is the safe, conservative, and optimum solution as far as you're concerned for your company, yeah?
Well, yeah. Look, it's if you can save time on permitting can really slow down a project. So you just do your NPV calculation, or why spend money now drilling out more of the same if I still have many years of permitting to do. So we can advance the permitting aspects and hopefully improve our NAV. And in the meantime, we've got a tremendous amount of news flow coming up from Tyko and our discovery there. And hopefully we have more discovery success, and we'll have lots of catalysts and anticipate drilling right through the end of the year.
Okay, Derrick. Well, I appreciate you making the time. Despite your delicate state, have you picked up a cold, or are we going full-blown COVID from the conference?
Oh, no, this is very positively COVID.
Jeez. And was it dumpy? I mean, has it floored you?
Oh, pretty much, yeah.
Oh, wow.
Yeah, the mind is not quite where it should be, and the temperature is rising with this little fleece on.
Oh dear. Well, look, poor you. But you got to do these conferences, and I'm afraid for you, conference season is just starting, isn't it? So you've got one or two lined up. Is your expectation to just be talking to shareholders and making them feel a little bit better about things, or is it looking at new money? Or is there sort of general interest in anyone who's got a copper, nickel, PGE project? You're going to get those some knocks on the door for the next couple of years. I mean, what are the sort of conversations you're having?
It's all of the above. We're engaging with new potential institutional shareholders. We're looking at and talking to some of our existing shareholder bases. A large part of our outstanding shares is held by institutions. My best guess is 50 to 55%. Unfortunately, you can't have the same visibility in Canada as you can on the ASX. So, it's a huge amount of stock, and there's a number of people there that we need to keep current in terms of our activities. So we're touching base with those folks. And what we're seeing in Canada is that the flow-through funds are getting cash again. So they're knocking on the door and want to have conversations with companies that are active and, getting news flow out there and potentially doing some financings. But we're in the enviable position that we have a lot of cash on the balance sheet and we have some optionality. So we do not need to finance. I think we would want to be opportunistic if we do. But we've got a long runway, so we're in pretty good shape.